Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site, we have Brian Joyce, who's a managing director on Nasdaq's market intelligence desk, and we're here for the midday update. We're also going to take a look at the charts on the SOX. Brian, great to have you with me. As always, before we take a look at the charts, let's recap some of the action that we're seeing today.
Yeah, so today we've seen a bit of a relief rally. The indices had an initial move higher, up about 0.5%. Almost to 1%, depending on which index you were looking at. They're beginning to fade now. You're seeing they're a little closer now towards break even on the session. So we're still seeing the overall theme that we've been experiencing for the last 3 or 4 weeks of selling pressure in the marketplace, risk off kind of price action.
All right, so our first chart is up here. We have the SOX daily. This, of course, is the semiconductor index. Interesting calls that you guys have been making over the past couple of weeks, identifying the tops up there.
Yeah, so we like the SOX index because it's a growth index. There's a lot of Nasdaq listed companies at the top of this index. There's 30 companies in the index that have an average market cap of 40 billion, median market cap of 18 billion. So it's very liquid, and for big institutional investors, if you're looking for alpha, this is where you come. In 2016, it was up 37%, and the next year in 17, it followed it with a 38% gain. And even last year, when there's a lot of turbulence, even though it was down about 28% off its highs for the year, it was only down about 8%, a little bit below that. So overall, it's a very growth-oriented type of index, and it's where you will find a lot of those big institutional flows. Off the December lows, it had a 50% gain up until the high made on April 24th. And 2 days later, on the Friday, the 26th, we put out somewhat of a bearish commentary on it. And it was based on a couple of the candlesticks on the weekly chart and momentum getting to extreme overbought levels. But right here on the daily, we see at yesterday's low, it marked the bottom thus far of this almost 5 week downtrend, a 20% decline off of the high. So a pretty dramatic pullback, but relative to the overall move, it was about a 50% pullback from what we did from December low to the late April high. It bottomed yesterday right at this 1290 level, give or take a couple of points. It represents a gap that was made in October on the way down. We know gaps in the future will act as future levels of support and resistance, and that was the case immediately on the initial rebound in mid-October, and then again in February and March, it acted as resistance and support, and then now again yesterday is acting as support.
All right, now as a technician, you're looking at price levels, but time is very important with your study. Let's go to the next chart, the SOX weekly. What are you looking at here that's different from the daily?
So the daily, you could have a lot of false moves. If you're a swing trader looking to be in a position for a few days, or let's say more so even a few weeks, you really want confirmation from what you see on the daily on the weekly time frame. So I think the candlesticks really shine through on the weeklies. And what we're seeing here, a couple of things. We have the 40-week moving average, which is synonymous with the 200-day. As you can see, in mid-2018 and into the fourth quarter, it repeatedly acted as support. We'd have a couple of dips below it, but it would finish the week back above for the most part. And then eventually, when it did break down, we had the big sell-off into the December. But right now, what we're seeing is during the uptrend in March, we had a 7% pullback. It was the biggest pullback before what we experienced here in May. And where did it bottom? It bottomed right at the 40-week moving average, which was also the 1290 level where we had that gap. So there was a cluster of support there. That is what we're seeing right now. Today's price action is on that 40-week, which at this point is up at the 1317 level. I believe that's what it is right now.
All right.
So what we're seeing on top of that is, along with the rally of yesterday's lows, the weekly candlestick right now is forming a bullish doji candlestick, very similar to what we saw at the top in late April, which is where we put our bearish call. In late April, we had, at the time, it was setting up to be a shooting star maybe, or spinning top candlestick. It ended up finishing the week with what we refer to as a long-legged doji pattern. Right now, we have a doji pattern as well on the bottom side. So it could hold right here. We'll have to wait to see how it finishes the week out. It is still a little bit early, but if you're looking to get involved, you're looking to make a play on the long side, what you do is you typically would use this week's low as your stop point, your risk level to assess, how to measure your position size and how much you're willing to put down.
All right, let's move along to our last chart, the SOX relative strength. When you take a look at this, why are you looking at the relative strength indicator? What does that tell technicians?
So the relative strength is just simply a ratio of one instrument over the other. When the numerator is outperforming the denominator, you will see the line trend higher. So in this case, we have the SOX index over the S&P 500. As you can see, it was in a long multi-year base, almost 10 years. And in mid-2016, it broke out of that base And what happened in 16 on an absolute basis? It gained 37%, and the next year, 38%. So there's a big breakout. We measure ratios the same way we would an individual security or an index. And right now, what we're seeing during this recent pullback, it's now finding support. Well, it could find support. It's currently doing so, where it found support throughout much of 2018. In mid to late 2018, it did break down below that level, but on the rally here in the first half of 2019, it recovered that and then broke out to new highs. It's now pulling back. It's returned to that support level. If you're long, if you're bullish, if your bias is to the upside as bull, you want to see this ratio hold this support line here. So this is something that you want to monitor as you're.
Because when you look at RSI, you look at 30 for an oversold condition and up to a range of 70 for an overbought condition. So right now it's smack in the middle. It doesn't suggest that the SOX is overbought, if I'm reading this correctly.
Well, those are two different things. So the RSI is a relative strength index, and that's a measure of momentum. This is just relative strength.
So that's separate
very
from
similar
RSI.
names, but we actually are talking about different things. So this is just simply when the instrument is trading higher, we know that the numerator of the ratio is outperforming. And when you're looking for investments, you're looking for good trade ideas, you want to be looking at sectors and industries that are outperforming the benchmark. So this is a very popular screen that investors will be looking for.
And this is why we have you on for Chart Talks, so that we learn something new every day when it comes to technicals. Brian, as always, thank you so much for joining me. And thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.